Many seniors are walking into banks, using ATMs, answering phone calls, and handling their money the same way they did just a few years ago. The problem is that criminals have changed their methods. Banks, consumer protection agencies, and fraud investigators are warning that some habits that once seemed harmless can now put your savings, Social Security income, and retirement funds at serious risk. If you have a bank account, this information matters. If you receive Social Security, a pension, retirement income, or any government benefits, it matters even more. The difference between staying protected and becoming a victim often comes down to a few simple rules that most people never hear about until after something goes wrong. What makes this especially important is that many of today's financial crimes do not involve a masked thief breaking into a house or stealing a wallet. Instead, they happen in broad daylight. They happen at ATMs. They happen on the phone. They happen inside bank branches. And in many cases, the victim doesn't realize what happened until the money is already gone. The first rule is simple. Never leave an ATM if your transaction does not finish correctly. Most people assume that if cash does not come out, the machine simply had a technical problem. Unfortunately, criminals know this. One of the methods investigators have warned about involves devices sometimes called cash traps. These devices are placed over or inside the cash dispenser area. The ATM processes the transaction normally. Your account may even show that the withdrawal was completed. But the cash becomes stuck behind the device instead of reaching your hand. The customer becomes frustrated, assumes the machine is malfunctioning, and leaves. A short time later, the criminal returns, removes the device, and collects the trapped cash. This is why many banks now advise customers to remain at the machine if something seems wrong. Check your receipt, check your account. Contact the bank immediately if the transaction appears incorrect. Do not simply walk away. Many seniors lose money because they assume the bank will automatically know what happened. Sometimes the issue can be resolved quickly, but only if it is reported right away. While we're talking about ATMs, there is another threat that many people still confuse with older scams. Most people have heard of skimmers, but many don't know about shimmers. A shimmer is different. It is designed to target chip card technology. These devices can be extremely small. In some cases, they are inserted inside the card reader, where they are difficult to see. The danger is that many people believe chip cards automatically eliminate fraud. The truth is that criminals constantly adapt. This does not mean you should stop using ATMs. It means you should pay attention before inserting your card. Look for anything unusual around the card slot. Check for loose components. If something looks damaged, altered, or out of place, choose another machine. And here's something many seniors overlook. Whenever possible, use ATMs attached directly to bank branches rather than isolated machines in convenience stores, gas stations, or remote locations. Criminals generally prefer machines with less oversight and fewer security cameras. This small decision can dramatically reduce your risk. Now let's move to rule number 2, and this is where many people unknowingly expose themselves. Always shield your PIN. Not sometimes, not only when people are nearby. Every single time. Many people still treat PIN shielding as a courtesy. They think they're being overly cautious. In reality, it should be considered a basic security requirement. Criminals do not need to stand directly behind you. They may be several feet away. They may be sitting in a vehicle. They may be using small cameras positioned nearby. Your PIN is one of the most valuable pieces of information connected to your account. Once someone obtains it, other layers of protection become much easier to bypass. A surprising number of fraud cases begin with nothing more than someone observing a PIN entry. Cover the keypad with your hand. Position your body to block the view. Take an extra few seconds. Those few seconds could protect years of retirement savings. Now here's something even more important. Many financial crimes today are not technology crimes at all. They are psychology crimes. This is where rule number 3 comes in. Never hand your phone, bank card, or personal information to a stranger who offers help. That sounds obvious, but criminals understand human behavior better than most people realize. Many seniors grew up in a culture where being polite mattered, helping others mattered. Trusting people was often considered a virtue. Scammers know this. They use friendliness as a tool. They create urgency. They create confusion. They make themselves appear helpful. Imagine you're having trouble with an ATM. A stranger approaches and says they know how to fix the issue. Or perhaps you're struggling with an online banking screen. Someone offers to take a quick look. What seems like a helpful gesture can become a direct path to your financial information. The moment another person handles your phone, they may gain access to banking apps, verification codes, account details, contact information, and passwords. The same applies to your bank card. Your card should never leave your sight. Your phone should never leave your control. Your personal information should never be shared simply because someone sounds convincing. Most people think fraud starts with technical expertise. Very often it starts with a conversation. And that brings us to the most dangerous threat in this entire discussion. This is the one causing some of the largest financial losses among seniors. This is the one that has led lawmakers, regulators, and financial institutions to take extraordinary steps. It involves cryptocurrency kiosks and impersonation scams. Many seniors have never used a cryptocurrency kiosk. Some have never even heard of them. Yet scammers are increasingly directing victims to these machines. The fraud usually begins with a phone call, text message, email, or computer pop-up warning. The criminal claims to represent the heirs, or the FBI, or Social Security, or Medicare, or a bank fraud department, or another government agency. They sound professional. They use official-sounding language. They often know basic information about the victim. That information creates trust. Then comes the pressure. The victim is told that an account has been compromised, a crime has occurred, benefits are at risk, an arrest warrant exists. Money must be protected immediately. Action is required now, not tomorrow, not next week. Now, this is where fear takes over. The victim is instructed to withdraw money, then they are directed to deposit that money into a cryptocurrency kiosk. The criminal claims this will protect the funds, but the reality is very different. Once that money is transferred through the system, recovering it becomes extremely difficult. In many cases, it becomes impossible. Think about what makes this so dangerous. The victim often performs the transaction personally. There is no masked robber. There is no forced entry. There is simply a carefully designed manipulation campaign. That is why these scams have become so effective. Many intelligent, cautious people have fallen victim. The key rule is simple. No legitimate government agency will call you and demand immediate payment through cryptocurrency. No legitimate Social Security representative will instruct you to deposit money into a crypto kiosk. No legitimate ears employee will demand cryptocurrency to resolve a problem. No legitimate FBI agent will ask you to protect your savings through a crypto transfer. The moment someone asks you to move money through one of these methods, the conversation should stop. Hang up. Contact the organization directly using a verified phone number. Do not use the phone number provided by the caller. Do not trust the caller ID. Do not trust the urgency. Verify independently. That one step could save thousands, tens of thousands, or even hundreds of thousands of dollars. Now let's discuss something that rarely receives enough attention. Rule number 4 involves paperwork. Many seniors sign financial documents without reading every page because they trust the institution. Trust is important, but verification is even more important. Banks regularly update policies, disclosures, account agreements, fee structures, security procedures, and service terms. Most changes are routine, some are important, and occasionally a small detail can affect how you access your money, how fraud claims are handled, or what responsibilities belong to you. Many people sign first and read later. This is where mistakes happen. If a document affects your account, your money, your access, or your legal rights, take the time to understand it. Ask questions. Request clarification. Take documents home if necessary. Review them carefully. A few extra minutes can prevent major misunderstandings later. Remember, once something is signed, correcting problems often becomes much harder. Now we come to one of the most overlooked protections available to seniors today. Many people do not know it exists. Some banks allow customers to designate a trusted contact. This is not the same as giving someone ownership of your account. It is not the same as granting full access to your money. A trusted contact provides the bank with a person to reach if suspicious activity, unusual circumstances, or concerns arise. Think about the value of that. Suppose unusual transactions suddenly begin appearing. Suppose the bank notices behavior that seems inconsistent with your normal activity. Suppose fraud is suspected. Having a trusted contact can provide an additional layer of protection. Many seniors never ask about this option. Many banks never receive the question. Yet it can become an important safeguard. If you have a trusted family member, friend, or advisor, ask your financial institution whether trusted contact services are available and how they work. This small step may provide protection when it matters most. There is another mindset shift that can make a tremendous difference. Many people view bank employees as people who simply process transactions. But modern fraud prevention often depends on communication between customers and bank staff. If something feels wrong, speak up. If someone pressured you to make a withdrawal, mention it. If you received a suspicious call, tell them. If you're unsure about a transaction, ask. Many fraud cases are stopped because a customer mentioned something that seemed minor. The employee recognized a warning sign. Questions were asked. The transfer was delayed. A scam was interrupted. Your bank can only help if it knows what is happening. Silence is often a scammer's greatest advantage. They want secrecy. They want urgency. They want isolation. They do not want verification. Anytime someone insists that you keep a financial transaction secret, consider it a major warning sign. Anytime someone tells you not to speak with family members, bank employees, or financial advisors, consider it a warning sign. Anytime someone pressures you to act immediately, pause and verify. Real organizations allow verification. Scammers fear verification. That distinction is extremely important. Let's quickly review the 5 rules that can help protect your money. First, if an ATM transaction goes wrong, do not simply walk away. Stay alert, review the situation, and contact the bank immediately. Second, shield your PIN every time. Treat it as a critical security habit, not an optional precaution. Third, never hand your phone, bank card, or sensitive information to someone offering unsolicited help. Many scams begin with trust rather than technology. Fourth, be extremely cautious with cryptocurrency kiosk requests. Government agencies, Social Security representatives, law enforcement agencies, and legitimate financial institutions do not require emergency crypto payments. Fifth, read financial documents carefully. Ask questions, explore trusted contact options, and view your bank as a partner in fraud prevention rather than just a place that holds your money. Most financial losses do not happen because people are careless. They happen because criminals continuously change their tactics. The rules that protected you 5 years ago may not be enough today. The good news is that awareness remains one of the strongest defenses available. When you understand how these schemes work, you become much harder to deceive. Take a few minutes this week to review your banking habits. Check your account security settings. Talk with your bank about fraud protection tools. Review who has access to your financial information. Verify that your contact information is current, and most importantly, remember that no legitimate organization should pressure you into making immediate financial decisions without allowing time for verification. Your retirement savings matter. Your Social Security benefits matter. Your financial security matters. The more you understand these risks, the better prepared you will be to protect what you have worked a lifetime to build. Subscribe and share this with someone who may need this information.